Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi. Welcome to another edition of our weekly podcast. The US Fed Chair Powell's speech at the Jackson Hole Symposium remained the most widely anticipated over the last week. Global equities recovered from a multi-week decline, supported by strong earnings reporting by a US tech major and China's unveiling of further easing of its mortgage policy to support its property sector, boosting Asian markets. Fed Chair Powell's speech at the symposium highlighted the delicate balance that the US Fed has been trying to achieve in restraining the economy enough to reduce price pressures without throwing it into a severe contraction. He argued for holding interest rates steady for now, but kept the door open to raising them later this year should the economy not slow enough to keep inflation declining. During his speech, he also mentioned twice that Fed would proceed carefully and wait for more data before taking any further policy decision, likely signaling that there was no urgency to raise rates at the central bank's next policy meeting in September. For the week, the MSCI World, MSCI Asia ex-Japan and MSCI Emerging Market Indices rose around 0.3% to 1.9%. In the US, the S&P 500 index and Nasdaq Composite rose around 0.8% to 2.3%, while Dow Jones Industrial Average fell 0.4% for the week. Back home, Indian equities trended lower for the fifth straight week. The Nifty index remained under pressure, touching its lowest level since June 30th, down 0.2% for the week on broad risk aversion ahead of the Fed Chair Powell's speech at the Jackson Hole Symposium. Broader markets continued to outperform the Nifty index, with the Nifty Small Cap Index up 1.6%, while the Mid Cap Index was up 0.17% for the week respectively. Among sectors, telecom, capital goods and utilities were the best performer with gains of over 1.9%, while pharma and energy were the laggards with cuts of over 1.2% during the week. The Indian fixed income market took a breather last week, with the Indian government bond yields falling marginally across the curve, amid robust demand at the weekly debt auction by the RBI and tracking declines in the long-term US bond yields ahead of the Jackson Hole Symposium. The 10-year Indian government bond yield fell 2 basis points to 7.2%, while the 3-year and 5-year Indian government bond yield fell 1 basis point and 0 basis points respectively. The INR appreciated 0.5% against the USD to 82.6 per dollar, amid likely intervention by the RBI and lower crude oil prices negating the impact of rising US shorter-term bond yields and strengthening US dollar. Brent crude oil recorded a decline for the second consecutive week, down 0.6% to close at $84.3 per barrel under pressure from strengthening US dollar and weak manufacturing activity impacting global demand outlook. Among the other macro updates for the week, the first is on India's seasonal rainfall scenario up to 25th of August. As per India's Meteorological Department, cumulative rainfall for India stood at 7% below the long period average, East and Northeast India registering at 18% below long period average rainfall, driven by significant deficits in the Gangetic West Bengal, Bihar and Jharkhand region. Central India registered a 5% below average rainfall, driven by significant deficits in the Madhya Maharashtra and Chhattisgarh region, while Saurashtra and Kutch and Konkan and Goa recorded significant surplus rainfall. Northwest India registered a 9% above long period average rainfall, with Western Rajasthan, Himachal Pradesh and Haryana all recording significant surpluses, while Eastern UP recorded a significant deficit. The Southern Peninsular region registered a 16% below long period average rainfall. This was driven by significant deficits in the SI Karnataka, Raisalima, Kerala and Mahi regions. The second data was on RBI's FX reserves, declined by USD 7 billion for the week ending 18th August and stood at USD $595 billion. The FX reserves are up 17 billion since March 31st, driven primarily by a rise in foreign currency assets, which was up 18 billion amid robust foreign investor inflows and improving balance of payments. That's it in this edition of the podcast. Thank you as always for listening. If you enjoyed this podcast, please like and subscribe. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.